Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks. So stocks that are paying the highest premiums for covered calls and cash secured puts. Before jumping into this week's scan, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump into this week's high volatility scan. As always, I'm on the scan tab in the Thinkorswim platform. And I usually scan the S&P 500, but because of a comment on the last video asking to scan the NASDAQ, I'm going to go ahead and scan that this time. If you want to see me scan a different list, feel free to leave that down below in the comments. So let's go ahead and look at the NASDAQ 100. So it's a little bit more of a narrowed down list, and then click scan. I now have a list of the stocks in the NASDAQ 100 sorted by implied volatility. So highest implied volatility at the top and then descending from there. As always, this is after hours data, so it may look a little different when this video comes out. Looks like we have Warner Brothers at the top of the list, one that we have looked at before. Let's go ahead and look at Walgreens, one that I don't think we've looked at in a while. Let's see what kind of news it has going on. Looks like it has earnings coming up on June 27th and currently trading at about $15.45 with an implied volatility of about 62.9%. We can now jump over to the trade tab and look at what kind of premiums this is currently paying out. As always, I'm going to be looking at the 7 days out option, so options expiring the following Friday. I also have this custom column on my trading platform called percentage premium that quickly calculates the percentage profit for selling a cash secured put at a certain strike price, and it also gives you an estimate on the percentage profit for covered calls as well, depending on what strike price you want to sell. If you're interested in adding this to your own platform, check out the link in the description where I have free instructions on how to add it to your own trading platform. Now let's go ahead and start with cash secured puts. It looks like you could make about 0.89% selling the $13.5 strike price cash secured put. You would end up collecting premium somewhere in the middle of these two prices, so 1 cent and 23 cents or $1 and $23. The spread is pretty wide here, but you would most likely end up collecting somewhere around $11 or $12 for selling this, and that's what this percentage profit is calculated based on if you did end up receiving whatever the midpoint in premium is. The risk here is if you did end up getting assigned on this position, you would need 13.5 times 100 because each option contract is equal to 100 shares. So you would need $1,350 in order to purchase 100 shares if you did end up getting assigned, but you would be able to make about $11 or $12 in premium for selling this cash secured put. On the covered call side, looks like it would currently cost you about $1,545 to purchase 100 shares, but then you could go ahead and sell the $15.50 call option and collect about $29 in premium or about 1.97% in 7 days. Let's jump back to the scan tab and look at a couple more. Let's go ahead and look at Netflix, one that we haven't looked at in a while. Currently trading at about $653 with an implied volatility of about 42%. Definitely a much more expensive stock. Let's jump back to the trade tab and take a look at the kind of premiums it's paying out. Let's start with cash secured puts. Looks like you could make about 0.97% profit selling the 647.5 cash secured put, which means you would collect somewhere between $590 and $660, usually again the midway point between the two. But since this is a much more expensive stock, if you did end up getting assigned, it would cost you $64,750 in order to purchase 100 shares of the stock. On the covered call side, it looks like you could buy 100 shares right now for $65,326, and then you could go ahead and sell the $655 call options, which means you would collect somewhere between $860 and $895 for selling that, or about 1.34%. Let's jump back to the scan tab and look at one more. Let's look at Broadcom. I think they've been in the news recently because of a stock split, and it looks like they just had earnings on June 12th. currently trading at about $1,678 with an implied volatility of about 40%. So an even more expensive stock. Jumping back to the trade tab, we can look at the kind of premiums it's currently paying out. It looks like you could make about 1.28% selling the $1,640 cash secured put, which means you would collect somewhere between $1,980 and $2,220, usually the halfway point. But again, because this is a much more expensive stock, the risk here is if you did end up getting assigned, you would need $164,000 in order to purchase those 100 shares. On the covered call side, it looks like you could buy 100 shares right now for approximately $167,899, but then you could go ahead and sell the 1,680 call options and collect somewhere between $3,870 and $4,220, or about 2.41% in 7 days. Jumping back to the scan tab, feel free to pause the video and take a look at the full list of NASDAQ 100 stocks sorted by highest implied volatility at the top and then descending from there. If you have any questions or comments, feel free to leave those down below. And as always, if you want to help support the channel, don't forget to like and subscribe, and I'll see you all in the next one.